Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, welcome back to the house. Here we go, more Inside Real Estate talk. We got Mortgage Talk with Terri Waggoner.
Good morning, Mike.
Good morning, Miss Terri. How are you?
I'm doing great this morning. How about you?
I'm good.
Good.
And by the way, your number where folks can reach you is 866-607-5667. And you want to call Terri for all of your mortgage and refinance Texas cash out needs.
Yes, please call us.
Yes, please do.
Yes.
And by the way, thank you for saving the deal. We kind of talked about it before that we were working on it, but you saved a deal. I had a client that was with Chase Bank, and all their money was with Chase Bank, and then Chase totally flaked out.
Yeah, I
and
still
you
don't,
saved it, and we just closed it.
Yeah, I still don't understand how they couldn't do it, number one, and why they just kind of dropped the ball. And that's just what they did. They just kind of passed it off back to you and said, sorry, well, we're not going to be able to do this loan, but gave you no reason.
Exactly. No real communication. But, of course, you know, Terri, the consummate professional and our ultimate closer.
That's right.
got the deal done. I mean, you know, no nonsense. She picked it up. She's like, oh, no problem. We got it.
Yeah, sure.
And took care of it. So thank you.
We have an awesome team.
Yes, you do.
We got it done. Well, I wanted to talk. I have just kind of a couple of different subjects that I want to talk on quickly today. First is just kind of an FYI for anyone. You know, we've talked about USDA several times. USDA is a great product, but they're kind of backed up right now. When you do a USDA loan, you have to get basically a clear to close with our underwriters, and then it is shipped off to USDA for them to do the same thing, to underwrite, to kind of make sure it fits all of their guidelines.
Right.
They were a couple of weeks backed up just for the USDA underwrite. They did get it down to 1 week, but we received notice last week that across the board, all USDA offices will be closed for the week of August the 8th through the 12th. Just FYI, if you have a USDA loan or you just wrote a USDA contract, you're probably going to have to extend it if it's just a 30-day contract.
Okay.
Because my best guess is when they come back, they're already a week behind. Then they're going to be the week they were gone, and they'll have all that new business that came in. So they're probably going to be anywhere from 2 to 3 weeks for an underwrite at USDA. Okay, just FYI.
Fair enough. Enough.
Another guideline update.
Why are they doing that in the summer?
Yeah, I don't know.
Can they do that in the winter when it's slower?
Well, I think that they've come up with some new regulations that they're going with, and they're doing training. Now, why they didn't, half it up, half of the company do training this week, and so they don't have to close down altogether, I don't really know. No explanation. But USDA is going through some changes. We've noticed that. We've noticed that they've tightened up on some of their regulations. So we'll have to spend a show talking about USDA.
Okay. Fair enough.
Then another just quick update on the guidelines that I wanted to bring up. FHA. Everybody loves an FHA loan. We've talked about income where you have if you have unreimbursed business expenses on your tax returns. How many times have we talked about just tax returns? It's so important that you get your tax returns to your lender right at the very beginning of the process, because that can really mess up your loan if you wait till later. So you've got a lot of people have unreimbursed business expenses. I have them. I'm going to guess you have them. Everyone who's anywhere close to commissioned or travels outside of the office to do their job has unreimbursed business expenses. Right. Good news, Mike.
Really?
Yes, good news.
Yay.
If you are a regular W-2 income buyer and less than 25% of your income comes from commissions or bonuses, so you're just a regular Joe making a W-2 income, if you have those unreimbursed business expenses, we don't have to count them. We don't have to take a look at your tax returns now.
That's all right.
Now, if your income, if 25% or more of your income is derived from commissions, then we're going to have to go back and do that, but and take a look at tax returns. But I thought that was a really cool guideline update that I wanted to bring to you. So, if we've got an issue with a lot of unreimbursed business expenses, we'll take a look at maybe doing it FHA and not having to count those.
Gotcha.
Okay.
Fair enough.
All right, so then I wanted to just talk. I don't know how much time we have, Mike. Not very much.
Yeah, we got a few minutes to go. We're good.
I get a publication. It's called Scotsman's Guide. It's a monthly publication. It's generated mostly to mortgage originators, and it talked about the difference in the vision for the housing financing in our political world right now. So I thought I would do that in light of our guest today.
There you go.
So obviously the Republicans and the Democrats have vastly different opinions on how to make this work. So the Republicans have they have different roles, different visions. Republicans are wanting to make the case for cutting government regulation. They want to do that in everything they do anyway. They want to cut government oversight, which is a good thing. Should I say that?
Yeah, I think it's a good thing.
Yeah, me too. So they are very critical. Republicans are very critical of the sweeping reform that hit us in 2010 with the Frank Dodd and the CFPB. The Republicans actually have a term for the CFPB law that came out in 2010. They call it legislative Godzilla. I didn't know that. But they call it that because it's crushing small and community banks and other lenders. And it really is. A lot of our brokers and smaller lenders, they just had to go away.
Right.
Just because of the regulation. They can't keep up with all the government regulation that's been put in place. And so Donald Trump's quote for housing, Frank Dodd has made it impossible for bankers to function. Makes it very hard for bankers to loan money, for people to create jobs, for people with businesses to create jobs, and that has to stop. Okay? So then let's look at the other side.
Yeah.
We'll look at the Democrats. They want tougher regulations. They want more government oversight over the housing market.
Boo.
And, yes, and I don't know that I agree with that, but they want to invest more money in CFPB, and that's part of all of this regulation that went into effect in 2010. So they want to throw more money at the regulation that's overseeing it. Hillary Clinton's quote, "The Consumer Financial Protection Bureau," that's CFPB, "has only one mission: protecting Americans from unfair and deceptive financial practices, and it is succeeding." So greatly differing views on each side of the aisle there.
Yeah, no doubt about it. When it comes to mortgage lending, I mean, look, there's got to be a fair balance of,
right.
But at the end of the day, it's up to the bank on how they're lending and assessing risk. Look, they're the ones doing the lending. Assess the risk and go from there.
Right.
And obviously, we need, reasonable government regulations on everything.
I agree with that.
To keep everybody in line. Everybody gets too crazy sometimes, giving loans to people that, just have a pulse, but when the government's telling you to do that behind the scenes.
Exactly.
And that it's okay to do that, well,
And then we get our hands
our
slapped.
free market is going to say, yeah, sure, let's do it. Write those loans. Write them, because they're getting paid. Damned with the consequences. They're coming down the line. Right.
But with all these new regulations that went into effect and all the new forms and everything that we've put in place, the whole purpose supposedly was to help inform the buyer, the consumer, more on their loan. And that I don't believe that's happened. I believe that it's confused our borrowers even more. I don't believe that this new loan estimate versus the good faith estimate, I don't believe it did its job in keeping the borrower informed on what they're doing.
Right.
The information is put out there to them a little more concise and a little more readable, but it's still very confusing. They added more information that it's just confusing.
Right.
It just confuses the borrower. And it's okay that we have to explain that. I don't mind explaining all the numbers to the borrower, but it did not simplify the process.
Right. Yeah, I mean, we need to let the banks, let the professionals do what they need to do. We need the government regulations. We want to make sure that the consumer is understanding what they're getting.
Right.
Of course, but how ignorant do you need to be to see that you're getting an arm, and
Yeah.
that is, hey,
Take a look at what you're doing. Question the person that you're dealing with.
Exactly. Look at what you're doing and sign off on what you're doing. It doesn't make any sense. But, yeah, you're right. Absolutely. We need a good, fair balance. And there you go.
Yeah. Yeah. I never mind a borrower asking as many questions. I love it when they say, I have a stupid question. None of them are stupid questions.
No, ask as many questions as you can.
Ask away. It's our job to answer those questions for the borrower as they come up and to completely make sure that they understand the process that they're going through. That's my job, is to make sure that they understand what they're signing and why they're signing it.
Absolutely.
So.
All right. Well, fair enough. Well, folks, we're going to take a short break, and then we're going to come on back. I believe we've got Dinesh D'Souza on the line for us holding, so that looks good. We're going to take a short break and then come on back.